Hi guys. I am a participant of Flight Academy Goldfinch. And today, I want to tell you about income statement. What is an income statement? An income statement is one of the three important financial statements used for reporting a company's financial performance over a specific accounting period. Also known as the profit and loss statement or the statement of revenue and expense, the income statement primarily focuses on the company's revenues and expenses during a particular period. The income statement focuses on four key items: revenue, expenses, gains, and losses. Revenue. Revenue is divided on operating and non-operating. Operating revenue. Revenue realized through primary activities is often referred to as operating revenue. For a company manufacturing a product, or for a wholesaler, distributor, or retailer involved in the business of selling that product, the revenue from primary activities refers to revenue achieved from the sale of the product. Similarly, for a company, or its franchisees, in the business of offering services, revenue from primary activities refers to the revenue or fees earned in exchange of offering those services. Non-operating revenue. These revenues are sourced from the earnings which are outside of the purchase and sale of goods and services. It may include income from interest earned on business capital lying in the bank, rental income from business property, income from strategic partnerships like royalty payment receipts, or income from an advertisement display placed on business property. Gains. Gains indicate the net money made from other activities, like the sale of long-term assets. These include the net income realized from one-time non-business activities, like a company selling its old transportation van and used land, or a subsidiary company. Expenses and losses. The cost for a business to continue operation and turn a profit is known as an expense. Some of these expenses may be written off on a tax return if they meet the IRS guidelines. We can divide expense into three subspecies. The first, primary activity expenses. All expenses incurred to generate normal operating income related to the core business of an enterprise. They include cost of goods sold, selling, general and administrative expenses, depreciation or amortization, and research and development expenses. Typical items on this list are employee salaries, sales commissions, and utility costs such as electricity and transportation. Secondary activity expenses. All expenses linked to non-core business activities, like interest paid on loan money. Third, losses as expenses. All expenses that go toward the loss-making sale of long-lived assets, one-time or any other unusual expenses, and lawsuit expenses. Income statement structure. Mathematically, the net income is calculated based on the following. Net income equals revenue plus gains, expenses plus losses. Uses of income statements. Though the main purpose of an income statement is to convey details of profitability and business activities of the company to the stakeholders, it also provides detailed insights into the company's internals for comparison across different businesses and sectors. Such statements are also prepared more frequently at the department and segment levels to gain deeper insights by the company management for checking the progress of various operations throughout the year, though such interim reports may remain internal to the company. Based on income statements, management can make decisions like expanding to new geographies, pushing sales, increasing production capacity, increased utilization or outright sale of assets, or shutting down a department or product line. Competitors may also use them to gain insights about the success parameters of a company in focus areas as increasing R&D spends. Creditors may find limited use of income statements as they are more concerned about a company's future cash flows instead of its past profitability. Research analysts use the income statement to compare year-on-year and quarter-on-quarter performance. One can infer whether a company's efforts in reducing the cost of sales helped it improve profits over time, or whether the management managed to keep a tab on operating expenses without compromising on profitability. The bottom line. An income statement provides valuable insights into various aspects of a business. It includes a company's operations, the efficiency of its management, the possible leaky areas that may be eroding profits, and whether the company is performing in line with industry peers.